Hey there, neighbors. Most homeowners are leaving thousands of dollars on the table because they don't know how to use their insurance benefits properly. Your insurance can actually pay for your rent, gas, food, and even your laundry if your home is unlivable. But most people either never claim it or they get denied because they're doing it wrong. If you don't know who I am, I'm the neighborhood adjuster. I run the claims department where we help homeowners navigate the insurance claim process without getting taken advantage of. I make these videos because I want homeowners to understand how insurance really works so they stop getting screwed. If you use this info to protect your biggest asset and actually win in claims, maybe one day you'll work with us. That's why I do this, so let's get into it. What is loss of use and how does it work? Loss of use, aka additional living expense or ALE, is money your insurance company pays you when your home is unlivable due to a covered loss. It pays for temporary housing, hotels, Airbnbs, rental homes. It also pays for increased food costs if you can't cook at the home, gas and transportation if your rental is farther away from your home, laundry, pet boarding, storage, and other necessary costs. Now, it doesn't pay for upgrading your lifestyle. You can't go from a three-bedroom home to, say, a mansion. Expenses you would have had anyway, regular groceries, that doesn't count. Only the extra expenses. Now, losses that aren't covered by your insurance policy, that means you don't get ALE either. So if you're paying for insurance, why wouldn't you use every dollar you're entitled to? So we're going to go through some of the do's and don'ts of using ALE and the biggest mistakes to avoid. So the first big to do is make sure your home is actually unlivable. Insurance companies will fight you on this. They'll say, well, you still have a roof over your head, even if your house is a disaster zone. If your home isn't safe, sanitary, or functional, that typically qualifies you for ALE. Say if you don't have running water, no electricity, major mold or fire damage, that is the definition of unlivable. One broken room, but the rest of the house is fine, they'll say it's livable. So the solution is typically get a contractor or an inspector or a city official even to confirm that it's uninhabitable in writing. Now, the first big don't is never move out without approval. If you leave before proving that the house is unlivable, insurance companies will typically say you left voluntarily, which means no ALE. You need documentation before you move. The best solution is call your insurer, file your claim, and then ask for ALE in writing before relocating. Now, the second big do is keep every receipt. Track all of your expenses. ALE only reimburses what you actually spend. So if you don't have the receipts, you will not get any money. Keep a detailed record for hotel expenses or rental payments, especially the food expense. Only the extra cost will the insurance company cover you regularly than your grocery bill, like gas, parking, laundry, and other necessary expenses. You have to keep track of all of those receipts. Now, an adjuster tip I'll give you is use a dedicated credit card or an expense tracker just for the ALE cost to make it easier when you file your claim. Second big don't is never accept the insurance company's first offer without questioning it. Typically, what the insurance companies will do, they'll try to give you an advance payment against your loss of use coverage, or they may say it's only going to take 2 weeks for the repairs to be completed, but you're going to always challenge that because no one ever knows how long the repairs will take. They may say your hotel is too expensive, but your insurance company has to match your standard of living. They may even say your food budget is too high. But if you can prove the increase compared to your normal grocery bill, it has to be considered. Here's another adjuster tip. Always have proof of the calculations that the insurance company tries to give you because it may just be unfair. Now, the third big to do is know your policy limits. Most policies cover 12 to 24 months of assisted living expense, but some have a dollar cap that may be $50,000 or an aggregate of your replacement cost value of your home. Once you hit the limit, the payments will stop, even if you're still displaced. So always check your policy and know your limits. Even if you have to make a call out to the neighborhood adjuster, I can certainly let you know what your policy limits are. All we would have to do is have a quick conversation and review your declarations page, and we'll get that squared away for you. So my final warning, insurance companies won't ever remind you to use your ALE. They won't call you and say, hello, Mr. Insured, we'll pay for your rent and your food while your house is unlivable. They will happily keep that money unless you know how to ask for it. So are you going to let them keep what you're owed, or are you going to get every dollar from your policy that you pay for? So lastly, if you have any questions or concerns, or if you need a pro review of your policy to make sure you're covered, just follow up with me, the neighborhood adjuster, here at the claims department, and we'll walk you through all of your coverages so you'll know exactly what you're covered for. Stay safe out there.